a very broad study of the market, of consumers in different markets in the Americas, in Europe, and in Asia, and there are a few trends that come to mind. One of the things is definitely new customers. So what we learned is there's a wealth of customers out there, lots of new clients personas with different ideas about how their wealth tech offering should look like. So obviously, that's a great opportunity. Then we're talking about tech, so the delivery models will change. It's not necessarily only about digital-only offerings, but there's also a big aspect to it about enhancing the existing models with hybrid technology and making sure that the advisors are more productive than they are today. Third one is new offerings. Everybody knows about the enormous acceleration of passive products, but there's more to it. There is private markets, there's digital assets, of course, there's the whole aspect of ESG, so a lot of things that can actually happen here. And if you look at the numbers, the estimate is that by 2030, more than half of all of the products will actually come from these categories, so lots of change happening. Then there's the new economics, and this is about really the bottom line impact and the impact on cost and efficiency. It's also going to be sizable. And finally, how to get things done is a big part of the equation. Yeah? It's not only the what, but it's actually how to make it happen. And the training of people will become one of the focus areas because based on our study, about 70% of roles will have to be retrained to be able to address all of these new challenges. So this in total, lots of change going on, but let's see how to make that practical. Yeah, and let's maybe start with you, Chris, yeah? Because we talked about this topic, I think 2 weeks ago for the first time, and the question was, okay, how is the industry actually changing, and what makes change really so difficult? And you answered, it's a lot about institutional knowledge and how this has to change over time. So maybe a few thoughts from you and also a quick intro how Elinvar really fits into this equation.
Yeah, first of all, thanks for being here and thanks for the invitation. Great to have a discussion with all of you here. A few words, what is the core idea behind Elinvar? I worked in a private bank before founding Elinvar, and one of the learnings for me was when I think about banking infrastructure, core banking systems are very much optimized for balance sheet driven business and for payment. And everything around investment product and wealth is typically done by, on the one hand, very functional driven things like a portfolio management system, and a lot of Excel and a lot of manual work. So there's still a lot of documents sent around, a lot of things really done by Excel. For example, people putting together downloads from one system and the other system, dividing it by advisor, sending Excel lists to advisor, and that's how things come together. And therefore, I would argue that we need somehow to integrate all of this, because on the other hand, one of the things missing on your chart when you think about the driver behind all of these changes, the key driver is obviously the client, and clients, especially in wealth management, are now the early adopters of technology. That's something which is often ignored. In the early days of technology, the first adopters were typically the nerds who understood how to code. Today, it's the ones who can actually afford the new stuff. So the newest iPhone is usually bought by the ones who can afford it, to make it very simple. And therefore, they also ask and require their providers, be it the lawyer, be it the banker, to provide them with the same service and with the same, using this channels they are used to use. And obviously uploading PDFs to an online banking is not the most modern way of presenting information about your assets. So therefore we founded Elinvar with the idea to bring together all the things you need in order to provide investment and wealth management services on one integration layer, supporting business processes. So that's the core idea, everything on one integration layer, and then enabling our clients, banks, to use the services they need for their business model. Why do I think organizational knowledge or institutional knowledge is so important? Because I think historically it's not there. So when you think about wealth management, as mentioned already, you have on the system level a lot of separated functional systems, and if you want to answer a question, so for example, if I wanted to do something like, I want to know all the clients who are invested in a particular product, and ideally I also want to know why they are invested in this product. So for example, what have been their answers in the questionnaire? that was a task which was answered with something like 2 weeks of manual work, research, and a lot of Excel. So therefore, there is no knowledge. And when you think about the advisors, they basically have, as an individual, a lot of knowledge about their clients. But if an advisor is on holiday, the client pretty much feels like a new client for the organization. So what the organization needs, and then you link it with all the things you mentioned, like, for example, more and more touch points, because clients interact in person, they interact online, they interact by calling someone. What the organization needs to start, they need to start bringing together the different infos they have to increase the client experience. And also, by the way, and this is a link to the rest of the panel, to fulfill regulatory requirements. Because, for example, MiFID says something simple like, you are required to consider whatever knowledge you have about a client when you propose something. If the organization does not know what they know about a client, that's becoming a very, very challenging task.
Yeah, thanks for sharing. You're mentioning the organization doesn't have knowledge, yeah, and obviously wealth management is a trust-based business, yeah. So maybe from your perspective, Matthias, because I mean, obviously, you know very well what happens inside a private bank and how knowledge is accumulated. Would you buy into that statement? Yeah, do we need institutional knowledge more, not more the digital solutions? And if so, to what degree? And how does it really come together when you think about the advisor who's actually there talking to the client?
How much time do I have for that answer? It's like, well, it's a big one, but in an essence, and let me start with the word he was using. For a traditional private bank such as Bank Julius Baer, there is one word that outshines everything and brings everything together, and that's the word of trust. I mean, trust, to our opinion, is the currency of the future. And if you break down a little bit how trust over time comes into existence, and you will hear all of that, it's essentially 3 factors. It's the shared value between your customer and your company, safety and reliability. If you have these 3 factors over a long time, you can establish long-term business relationships. Why is that so important to us? Because that allows us to get that knowledge of your customers. But indeed, the challenge is you have it individualized with your RMs, with your relationship managers, whether all of these topics find their ways into the systems, and if they have to, right? And I think that's the deliberation in how much you put into your system. That needs to be there for regulatory reasons, and what is things that you need to know to service a client. And that's the other point when we talk about the future of wealth management. We strongly believe the future of wealth management is in creating value beyond wealth. I think traditionally private banks have been very strong in doing the asset management, the client relationship management, but over time that is just part of the service offering. Hence the question for other services to render over time to generations is actually for us the key question. Less so, what is then in the system encoded strategically. On a technology level, of course, that's the big challenge. What is in the system and how you get it convenience. How convenient is it for our clients to operate with the e-banking systems, and even more so for our RMs. So that's where we use the word of augmentation of relationship managers. How can we augment our colleagues that service clients on a day-to-day basis most efficiently? And also for them, convenience matters.
Yeah, I think that very much resonates with what I heard from many different wealth managers would say, okay, it's actually the advisor on the front, but it's also the technology that have to come together to create this. And I think what I find a bit scary is that everybody is pretty much on the same page when it comes to the target solution and how it should look like eventually. But then the question is, how on earth do we actually make it happen? Yeah? And there's some of the larger players who, of course, invest millions and even billions, into these new technologies. That is one thing. But of course, when we look at the private banking market, there are some large players, but there's also independent financial advisors, some of the smaller private banks. Yeah. So Christine, maybe your perspective really on all of this change, how does it affect family offices, smaller private banks? How do they cope with this? And maybe what is there a silver bullet to actually solving this investment issue?
Yeah, thank you very much for the opportunity to speak here. So first let me talk 1 minute about RIDE. We're a FinTech from Berlin, and we're building the next generation private bank. We work with the customer type A, so customers who have 100,000 euros or more in liquid assets. And they come to us because they're looking for a professional setup for their wealth. So they're looking to start a foundation, Stiftung, or a holding company, Vermögensverwaltende GmbH, or they're looking for tax advice or accounting, which we provide. We work together with more than 150 tax advisors for this, and we provide software solutions, and automated security booking. So we started with this customer segment, but we are also cooperating with brokers and private banks, and increasingly more family offices. So we also have some accounts that are more than 100 million in assets. So I can share insights in that and the trouble that many face when going digital. And I can totally see the need for a company like Elinvar, because the problems they face is manifold. So very often this big IT budget is not there. It has not been there because it's not in the DNA of every private bank to provide software solutions. And then B, it's the talent really. In Berlin is the hub for software engineers, but it's not that easy to attract talent everywhere else. And I think with it comes the issue, you spoke about trust. How do you create trust in the modern age? And you said it's relationships, safety, and reliability.
Shared values.
Shared values.
Something that corresponds between your values that you have as a human being with what the company represents as a starting point.
And I would like to add to this, because when I look at our clients, I'm not sure if they're younger, but I think it's a slightly different group. They have a different approach to investing. And to them, trust means great UX. You want a web application, you want the app to behave in a predictable way. You don't want to be irritated by the customer portal. And we very often still see that. A lot of the software used by family offices or that looks like Windows 95, very, very outdated. So I think that's one problem for many. But then also trust nowadays is created by social media presence. If you think about it, before you meet a new business partner, you would of course look at their LinkedIn profile or their homepage. These are obvious examples, but the next generation, they want to see an Instagram profile, they want to see TikTok. And maybe a good question here for the audience, who's on Discord? Who uses Discord? Oh yeah, very well. Because this is something, for example, that we do. We have a Discord server for our clients. 50% of our clients are on Discord, and they exchange opinions about trading and investing. So private banking, I think it's becoming less private. It used to be the strength of private banks, but our clients, even those with a 7-figure account, they want to share knowledge and insights, and get a term, social trading or social investing. It's a new trend that I see, and that private banks have to deal with.
Maybe if you take the mic.
I completely concur. And the interesting thing is, as our industry moves, what you said, certain things that used to be our USP become a commodity. Now, when you talk about trading, I think many clients have nothing against sharing their trading ideas. Still, when it comes to confidential information that is important to them about family situations, total wealth, I think it's different. So again, I think we need to be very differentiative in saying, what is it, for example, on transactional level, where people are more willing to share and be open and want to do this and expect us from us to enable, whilst for other things, that is really important to their families or to their wealth, they still want to look for that confidentiality for good reasons. And if I may, that's the big challenge as a private bank, and you framed it very well. The expectation of clients is you get the same client experience that you would get from a Google, from a UBS, or from a FinTech, UX, on the transactional basis, e-banking, payments, trading. And at the same time, in the moment of truth, we believe they expect then this personal relationship whereby you have this information symmetry that your RM knows exactly what you have been doing in the digital channel and can take on from there seamlessly. So I think we're going to see this shift of things become commodity, and you need to shift on, which is why we say you need to create value beyond wealth, because it might go in that direction. So it's actually playing together.
Yeah. Yeah, thanks for pointing this out, and this reminds me of some of the discussions that we had really on the peer-to-peer level, and what I took always away from this discussion is that, okay, yes, like social investing is something that is very popular with the younger ones when it's about brokerage and such, but we also found that the peer-to-peer idea becomes increasingly more important as you move up the ladder. So if you look at ultra high net worth individuals, being connected to a community of investors, for example, on the West Coast in the US, tapping into this and realizing my wealth manager is actually also catering to a number of people that I find interesting, and they can make those connections. Yeah, I think that's of great value, but it's certainly different from being connected on an app, right? So, yeah, because the question is really, what do you want to share at which point, and you need to dive a bit deeper into this. What also came to mind is it's also a regulatory aspect to it. Yeah, so I would be curious. We heard that tech is really big. There's lots of investment needed. We need to be very careful when we're introducing these new offerings, how they align with what the client needs, but also what the regulator demands. Maybe you can share your perspective on how tech can also help to some of the regulatory challenges that we're facing, because that, of course, is something that might or might not stand between what we envision for the future of wealth management and what we can actually do.
Yeah, thinking about the discussion we're having here, I think maybe we go one step back and looking what would be if we had no technology at all. I think so asset managers, who are our main clients, but same for banking, could not work at all. Yeah, and how can the development look like? And this is what Chris said. So the data is spread around in different systems. It's spread around different countries, and bring that together. Yeah. So this is what technology can help. Yeah, help bringing all data to one data warehouse, to have it in a central place, to being in the position to analyze the data in a proper way. Yeah? Because I think it's in banking and asset management, it's the same. Yeah, you don't have the data where you want to have it, and when you want to provide it, for example, to us, yeah, then they have to select it out of different systems. Yeah, and so I think this is very important, that you can bundle the data in data warehouses. Yeah, and on the other side, it's important that you can then enrich data with technology without manual processes. Yeah, this is definitely important, and then you can provide the data, so enrich data and send the data to wherever. For us, it's we receive data from asset managers to create regulatory reporting, and there it's good to have technology to provide that data. Yeah.
Mm-hmm. That's pretty interesting. You mentioned data warehouses. So I mean, when you talk to your clients, what's the trend? Are people going for more of a federated system, or is it really all about building that huge data lake where you integrate all of it, you know where it is, it's in one place, it follows certain rules?
It depends, yeah. So on the one hand side, it depends on the clients. If it's an international client, yeah, if an international asset manager has the tendency more to use the same system in several countries, to have the data bundled and not to have to collect that out of the different jurisdictions. Yeah, so this is one trend. The other trend is using data warehouses. Other have medium-sized have teams who bundle who do that half manual works, creating tools to collect the data, and others are using in the provider and the choice of provider. Yeah, if you have maybe several providers, you have to provide data in several kinds of formats, whatever. If you use one provider, but here we come back to the topic, it's a matter of trust and partnership. You have to rely on your partner then.
Yeah, that's that brings me really to the question that wealth tech is, and wealth management and asset management is really somewhat of a global business. And I think we talked about it yesterday during dinner, that everybody started off with systems in different countries and fairly isolated and using different standards. And if you had changed one thing here, you basically have to pay not twice, but 3 times, 8 times to make those changes. Matthias, maybe since it seems that you guys have been a bit on a journey to become more uniform and standardized, maybe you can share sort of the key challenge that made this difficult, because it looks like an obvious thing that everybody would push for standardization and make that platform and share the data and generate the trust, generate knowledge about the clients, but it doesn't seem to be that easy.
No, it's not. But I think the good starting point is again the client's view and their requirements. So we started again from the client journeys to look at what is it actually that they want from us, and derive from there, if you will, a technology architecture, how to stack, and really decide where do you, as a private bank, where you want to have unification. For example, that you have a unified client experience in the UI, because maybe some of the clients book in Singapore and in Zurich, so they want to see the portfolio the same way they will see it somewhere else. But that doesn't mean you need to go through the full stack and just harmonize and standardize for everything, because I guess for all of you who are in the private banking space, standardization is a little bit of a difficult thing. You want to deliver personalized services, and hence standardization is always a bit of a trade-off. But we found there is commonalities where you can standardize by, for example, the whole the UI level, so the user interface levels, the clients, the e-bankings, the way you show the data to your clients, there you can standardize and unify to create this brand image. Whilst the more you go down in the tech stack on the back ends, you stay quite localized, because also you want to respect the local rules and regulations. So I think the biggest piece was to find out where does it matter for the clients and where do we generate efficiency of scale, and how we do that in a staggered way.
That is very interesting. And you know, me working on data architecture and these topics, I was just one follow-up question. So do I have to imagine this like different silos in different countries, and you basically put sort of quote-unquote lipstick on the pig, then you have sort of the interface that's on top that unifies what is being done? Or is the ambition really to take this as a starting point and then go deeper and also standardize some of the back-end systems?
Yeah. So it's clearly not just the lipstick thing. Yeah. There is a strategic vision on how we want to have our technology run, also to address the cost-income ratio that our CEO wants to have us achieved. Because all of that obviously has an impact on clients, but also on the cost base, as you alluded to. So there is based on the client needs and journeys, a vision how that should be, with a clear prioritization. Where do we, for example, harmonize and synchronize, so to also be what we call create more bang for the buck? Because every investment I have to do for MiFID, I need to do it in Switzerland, I need to do it in Germany, in Luxembourg, and so ever. So there we look for standardization. And again, I use the word, where is it commodity? There you should standardize, and where it's personalized, you should not. But of course, because you mentioned it, client experience next to trust is key element today. So yes, we did use the lipstick to improve the look and feel, because that's what clients expect.
Yeah, I think the challenge sometimes is one guy's commodity is the other one's differentiator. Yeah, so you really have to look into what makes you special, right? And I think it's a great starting point if you say, okay, the trust is really the core of the brand, and then you can take it from there and see how does this translate into this. I had the feeling that when you talk, Chris, about wealth tech as a service, this is, I mean, a bit meant to solve parts of this topic. Yeah, also to go across different countries and to standardize a bit. So which part of this challenge would you say you guys can solve, or having a standardized platform, and which part of this is basically change management and a question of, you know, setting the plan and setting the vision?
Yeah, so usually I try to, and it was not originally invented by me. I think it's now some kind of like an industry way of speaking about the architecture. But from my perspective, the best picture is actually thinking about systems of interaction, like the front end. systems of coordination, which is like an integration layer where you bring together the different things and support the front end, but also have basically all the information from the different sources and can do your analytics, can represent your business processes. And then systems of record, which are very often very localized, starting with the simple reason of text, which is usually localized. So we focus very much on this coordination part and the integration layer. Yeah. That's the core of Elinvar, where we also feel that we can create the most value. On the systems of interactions, we did do a lot there, especially at the beginning. By now, I would say this is actually something where we, for example, started developing, providing a front-end API, because especially larger players just want to do their own thing there, which is then trying to represent their own customer experience, and we feel that it's especially for them easier to just build against our front end, our front-end API. But this integration layer where we really harmonize business processes, where you can really scale your operations, where you can really make sure that the way you handle, for example, MiFID is always the same. That's where we feel we create the most value, and where we also have the biggest enablement for our clients, because indeed, as you rightly pointed out, for most players, the necessary investment into the infrastructure is just too big. And in fact, they are even complaining and struggle to take the as-a-service cost of running the infrastructure. But when you think about tech investment, it's quite a challenge. I think this will always also be one of the key drivers for consolidation going forward, because it's just a question everybody has to ask themselves, okay, to what degree are they in a business model where they can finance the necessary infrastructure? And I think that's going to be something which will drive a trend there. Picking up what you said, like what is the biggest challenge? It's actually making use of the technology and not starting using it like in a way as you always did it. So for example, Excel allows you a lot of flexibility. If you're used to Excel, you can do whatever you want. Only challenge is it's not compliant at all. It's not documented at all. And it's very risky from an operational point of view. But of course, if you are used to doing things in Excel and now you get a platform and the platform says, okay, this is how you can do the processes, it becomes a challenge in itself. And they're, interesting enough, especially very small players who try to differentiate themselves by doing everything someone wants. They have the biggest struggle adapting to this. The larger players, who are often very much driven by, okay, we want to see some kind of more bang for the buck, have a much bigger incentive to think about this. And that's an interesting learning for us. So how do we get an organization to really make use of the technology and make the use of the change process and really take this proactively? And we now really start by very much addressing with our clients to say, okay, if you want to use us, please don't only take the technical decision, but also take the change decision. And we adopted our offering in a way that we say, okay, here's like the starting package where you can start using some of the benefits without so much of a change project, but you can really get your organization used to some of the benefits, like for example, putting all the information on one platform. But if you really want to make use of the big benefits, then you should start a real change project and think about the 70% you mentioned in your study, because I think this number is actually correct. So quite a few people need to adapt the way they work.
Yeah, I think the headless design that you mentioned, so to speak, you use the technical term, is also a trend that we see. If you go global, you'll also find that there are many like smaller players, second, third tier players, who are actually pretty happy with having a sort of a run-of-the-mill digital experience. And you say, okay, we just want to have it out there. We want to have the app. We want to have the omni-channel connectivity to be able to share all the data, and we fix the design later. But when they get to the point that everything is working, you very soon come to the realization, okay, the customer-facing part we need to own. We need to do this ourselves. We need to customize, and then of course you want to have a solution that has actually the different tiers to make that particular change happen. But I mean, Christine, obviously you have sort of a tech solution, yeah. So how would that work actually to plugging in a platform? Everybody says, okay, we have this modular platform, we have the data integration layer. So to use a platform like yours, would you need to have such an integration layer for this to work?
Well, I'm also quite surprised just on how many occasions Excel is still used, and I think that's because the current or the older generation thought about investing much differently from the current, the youngest generation. Yeah, and I think the challenge many banks or family offices have with their software, it's because it's very monolithic. Yeah, it's not a platform, and it's not built in a modular way. Yeah, if I look at how what family offices complain about is that the youngest generation, they want to invest in tokenized assets, as we have heard out there, or they want to invest in collectibles, Nike shoes, or in art. Yeah, and many solutions, they don't provide modules to do that. Yeah, so I hear, or let's even talk about direct investments in startups or in VC funds. Yeah, so I hear some family offices who still keep a spreadsheet to keep track of the capital calls. Yeah, and for us, we want to provide all of these modules so they can keep track of art or angels investments and so on.
And the user interface for the family office is basically, I don't know, they make it possible for their clients to invest into art. And then they have this huge spreadsheet, and they just send this to you, and then you need to digest through it. I mean, seems like when I talk to many of the fintechs, people talk about apps and the user experience, but oftentimes what happens behind the scenes is there are lots of ambitious people who take lots of time taking the Excel sheet, crunching the data, and making it work. How does this feel like?
I think the more the more extraordinary the investment, the more difficult it is to provide an API. So at some point, there still needs to be somebody typing in data, and particularly when it comes to art. There's no standardization.
And then you need the experts, of course, that can actually do it. I find this. What I also find interesting. We did a data transformation recently, and it was really also about doing this integration layer. And then we talked about Excel and what role would it have to play. And what I found sort of resonated with me is when the guy said, yes, we'll want to continue to use Excel, but we want to change it. We want Excel to be not the engine that drives the logic, the analytics, but it's supposed to be the interface of the assets that we actually have, and we want to make it easier for people to use Excel to tap into this. Yeah. So in a way that is, like you mentioned, Chris, that's the opportunity here to have these APIs and have these interfaces. And if somebody wants to use Excel, they can still do so, but it's much more coordinated. Yeah.
And maybe there's a fun fact. One thing we introduced in our platform, we call it Power Tables, which in the end simulates a lot of the Excel functionality so that every user can do this, but with the benefit of all the data being the harmonized data on the single platform and ensuring the compliance, ensuring the audit trail, ensuring event sourcing, so that you basically make sure you have the benefit of the flexibility, but still you make sure that you run it in a systematic way. And I think there, indeed, we come back to the overall trend that also regulation actually drives a different usage there. So I very much remember roughly 15 years ago, it started that for important strategic decisions, you needed to make sure that you can document how you analyze the information. It was an internal process of the banks. So that's when we started that you cannot just use Excel, but actually need to know 4I principles and cross-checks. And then if you think about it today, and you think again about something like the MiFID requirement, that if you learn something about the client, you need to make use of this and need to consider this in your DPM offering. How do you want to do this if there's no systematic way of analyzing information and you just don't get this? So there are actually cases where banks just don't want to know because they know that they cannot cope with the information. And I think that's the interesting challenge. And maybe also one more thought, I think we also need to be careful when we speak about wealth management, that we don't only speak about the super, super rich, where indeed you have like the super special cases, but the absolute majority of cases, from my perspective, are actually affluent to, let's say, rich but not super rich people who in the end have very ambitious requirements when it comes to their bank, and they are actually making up a huge part of the wealth. They make up a huge part of the actual client groups, and they are the most underserved group, because the super rich, that's always going to be profitable to just serve them manually. On the super retail, you have a different challenge because you actually don't have investment products and wealth management questions. But on the part in the middle, that's where you actually have your blank part.
Yeah, I think I'm going to come back to this question of the different segments in a second, and I'm curious to hear your thoughts, Matthias, on this. But before that, I just wanted to ask you, Andreas, it seems like this whole technical idea of data lineage and the data challenge, if someone were to ask you, what is the vision of really making that work and making it possible that you can actually trace the sources of the data, as you described it, that's actually the challenge. How would you describe that?
Yeah, I think it's around the topic we're discussing the whole time. Yeah, so coming back to our role, so LPA providing regulatory reporting, which is very standardized. Yeah, so if we have the data, yeah, we can provide regulatory reporting for every client. Yeah, there's not so much tailored. So that's the reason why it's good to use here a provider. But the challenge is to bring the data from the client to the provider. Yeah, and so what I think about, or what we think about, is wouldn't it be great to do that without a huge migration, yeah, to do it without mapping efforts, huge costs, yeah, then the asset manager could select the provider of choice, of trust, to the best one, yeah, and this is our vision, but I think we can be there looking at current developments, yeah, with ChatGPT, with now with Bart, we see that with AI we have a potential to do this data mapping, yeah, or looking for data in client systems, yeah. I think maybe it takes some time, yeah, but this is our vision. I think this would be great, yeah, because then the asset manager can focus on his core and also
that is interesting, yeah, because if I'm looking at some of the more traditional clients, usually what they think about is they take the data and there's a central repository where all of the data is being concentrated, and at the same time, especially in complex industries, what people think about is how can actually virtualize the data, how can we have this logical layer that tells us where stuff is, yeah, but at the same time don't generate the need from actually extracting the data and transforming the data, which is certainly challenging. Yeah. Would you say that is something that, again, is something that technology can solve, or is there also a different aspect to it that's probably more people related?
So currently it's very people related. Yeah, it's the most manual part in because you have to bring two worlds of systems together, yeah, somehow. And this is the time-consuming part. And so, but for the future, I can imagine that more and more it will be based on technology. Yeah, technology has to learn. But I can imagine maybe in 3 years or whatever it could work like that. Yeah, but then with very low human input, yeah?
I mean, what this essentially means, you can do more automation that brings the cost down, and then suddenly you come to the realization is if we actually succeed, yeah, in making that model viable, drive down the cost to serve, I can suddenly offer the same things that I offer to the very rich to an entirely new segment. I mean, we did the study, and it's pretty obvious here in Europe, but especially also when you look towards Asia, you see that there are really literally millions and billions of people, yeah, that are gaining in wealth that today probably don't sound too attractive, and you would say, okay, I can maybe serve them with a digital only offering. And those didn't really take off, if we're honest. So I'm curious to hear, maybe Matthias, yeah, because we discussed this also in some of our previous discussions. Are we seeing the private banks really going strong on this segment, you know, maybe from 100,000 to 3 million of assets under management? Because everybody's talking about it. It's a huge opportunity. But when you talk to people, they say, yeah, we're looking at this segment because these people might be extremely rich one day. Yeah? But that, you know, if it's just a leads channel, it doesn't sound too attractive. Yeah? So is there a way to sustainably tackle this segment?
And I'll start with what Chris said, and then come to your answer, if you allow me to, because, and that, I thought I bring something that might be a bit new to that discussion, and which is an insight we're generating when we see how our digital channels are being used. And interestingly enough, actually there's an age segmentation that you could see. Typically clients up to their 40s have a quite high affinity towards digital adoption, use the channels. Then it kind of, you have like the crypto winter where age brackets 40 to 58-ish. There's a very low number of e-adoption, and then comes the surprise. Actually, for most of our clients who can benefit already from their retirement, you see an extreme high e-adoption, which is counterintuitive when you always talk, the Generation Z and the Ys and digital natives. Actually, the fact seems to be more, how much time do you have to do and self-educate yourself with these boring banking things. Sorry for the word, right? So it's really the young generation who natively use it, and the ones who have time, if it's presented in a convenient way, who also use it. So I don't think it's a question of generation, but rather a factor of time. How much time do you want to invest, or just drop a call to your RM to take care of what you need to do? So that's one thing that we can see. Second to that, and that comes with it, we see a clear trend on digital, and I think that's where you allude to and why we need the data, that the shift from pure transactional banking goes toward content. We call it exploration. So we see over the generations that more and more clients want to have at their fingertip the opportunity to browse around, to educate themselves, to maybe simulate, and then the stops, that moment of truth from the simulation to the real deal making. And hence for us, it's less a question, do we offer a digital offering for that target segment, but more, can we build a digital offering around these journeys, independent of wealth or age, that helps on the global client base to service the various needs. But indeed, and that's the last point that, right, you wanted to ask me, of course, as a private bank where you typically would have a certain wealth that you can bring to the table, the question of pipeline management is the biggest one. One working instrument, I think still the best one, is the relationship or the referrals. Still the biggest client base that comes to the bank is through referrals of happy customers, A, or B, people that you know for a long time. Maybe they have been your clients or not, and at the moment they need you, you're there. I think we discussed it last night. I think if somebody does an exit and gets 10, 20 million, he or she gets the calls from all the big banks. It's too late at that moment when you call them and say, hey, it's Julius Baer, you know us. They say, yeah, I know you, but thank you, but no thank you, because I know 20 other banks who have been with me through all my life. And that's, I think, much more, how can you find and build up relationships? Maybe they don't need to open an account, but you need to be there for them, especially in the moment of crisis, that when the moment comes, they might see you as a trusted partner. That's where we try also with communities, young generation communities and others, to build up such networks. And I think you alluded to the network effect. You might be there, but you don't have to offer banking yet, maybe, if that makes sense.
Christine, you look like you wanted to react to that.
No, I think it's very true what you say, and I just want to chip in how we do it, because it's correct. The segment of the mass affluent, or some call it the middle private banking. I mean, those people who have just 1 million, they might have the very same questions as somebody who has 10 million. Yeah, they also want to know what stocks should I invest in? Should I buy real estate? Should I buy crypto? And they also want this personal touch. But obviously, you can't spend that much on the personal touch because you can't charge higher commissions. Yeah, so how we solve that at Ride, the personal touch, it's when you're in the fintech space, and probably you know me from the conferences, but the YouTube star is actually my co-founder Felix, and we produce a lot of content. Yeah, there's so much. Yeah, any tax question you have for vermögensverwaltende GmbHs, you will find the answer on our YouTube channel.
But you have to get the keyword right.
Seriously, but that's why all of our clients feel like they know us and they have this personal relationship. Yeah, so when we So what we also do is we do kind of roadshows where we have community events all through the big cities in Germany. And then very often people approach Felix and say, I know you from YouTube. Yeah. And I think what maybe the big banks or the private banks don't get right yet is nowadays for every brand you need a human, yeah, you need a face that embodies that brand, yeah. So, but who's the face of JP Morgan or who's the face of Julius Baer? Yeah, now for me it's now you. But before I couldn't really say, and I think, and that's why, for example, influencer marketing is so successful because people don't follow brands, they follow people. Yeah? Yeah. And I think that's something, yeah. Maybe it is my side. I think that's something to get right for the private banks. Yeah. And I mean, it's definitely true. I mean, we did the survey, and people said, FinTalks is the next big thing, and it feels like there's a lot of change going on. So, since we are unfortunately, a bit out of the time, I just wanted to give each one of you maybe the opportunity to summarize. What if somebody pressed you to say, what is the one thing that wealth and asset managers really need to get right, to get it into this digital future, or at least to get it kick-started? What would be that? Maybe Chris.
So obviously, I need to take this as a marketing opportunity. So the very simple learning is, yes, it's a big, big challenge, but on the positive side, it has never been easier to partner up with other experts, whether it's us or someone else, but it has never been easier to find experts helping you with this challenge. So let's talk about tackling it together.
Yeah, I think that's a very good final word. Yeah. When the FinTech boom started, there have been so many conferences with the title Banks or FinTechs Who Will Win? And I think we've both always said, well, nobody will win if they don't cooperate. Yeah, I think the key is in cooperation. So I think wealth managers don't need to shy away from digitization. They just need to find the right partner.
Thank you. So it's hard in one thing for me. It's two, yeah. So one thing is focus. So the asset managers should focus on asset management and should find solution for the rest. And the rest is, I think, mainly based on data and other tasks like regulatory reporting, where you can rely on partners like as well marketing for us. But I think it's really a proper solution, yeah. And I think the focus, and this is our aim to bring them in the position to focus on their business finally, yeah.
I will sound like a broken record. It's trust. It's trust and it's trust. And if you use that formula, I use it for myself day by day. Shared values, safety and reliability. If I choose a partner as a FinTech, I look whether we have shared values, whether you're secure, you're reliable. If you're a customer to me, you will look whether we have shared values, whether I'm safe and reliable. Use that formula, build up trust. You find the right partners, the right clients, and the right journey.
Yeah. I think that's a great way to summarize. Yeah. So partnerships. Yeah, it's really the new generation has different ways also of building trust. And at the end of the day, the idea is that there is a core to the business, and the technology can really help you to focus on what is important. That's what I took away from this, and it makes me actually pretty optimistic of what's going to happen, and that maybe we can actually capitalize on the growth and move in that direction. So thanks to all of you. Yeah, thanks to everybody in the session. Yeah, I very much enjoyed this, and hope we reconnect on some of the same topics. Yeah, next year or even sooner. Thanks.